Tom Piotrowski joins us live. How are we going to open up today, Tom?
Pete, we're going to take a knock down by around 0.9% is what the futures are telling us at this stage. It'll be interesting to see how our market shapes up in the context of the developments of the most recent session in the Northern Hemisphere. Stronger jobs numbers out of the US on Friday means that the US central banks are almost guaranteed of raising rates by 0.75% in the November meeting. That's what the futures market is predicting. So that means that we have seen US interest rate markets move to the upper end of their most recent range over the course of last week, up by almost 0.25%, 0.2%, where 10-year government bonds were concerned. So that all comes at the hands of those stronger jobs numbers and the fact that the US Federal Reserve has, as much as anything else, said that they're prioritising inflation management over everything else. And that's why markets are now in a different mindset when it comes to the belief around what they'll do with rates. What that means for our market today, look, will be lower, but what will be a balancing item will be the energy stocks, Pete. We've seen the US benchmark for oil, West Texas Intermediate, jump by 16% over the course of last week. And that's all turning around that commitment of OPEC to cut production. So it'll be worth keeping an eye on those energy stocks today. We're also moving into AGM season as well. Over the course of the next couple of weeks, there'll be a lot of AGMs held. So that's worth keeping an eye on, in addition to the inflation figures out of the US later on this week.
All right, Tom, good to see you again. Talk to you again tomorrow.